Recent question from a recent reader. What is leverage in real estate investing? Hi there and welcome to my channel. I'm Alexandra Docheva, RN, investor, holistic coach, and author of the book It Really Is Simple, A Holistic Approach to Self-Confidence. This short video is for beginners in real estate investing. Leverage means a lender is letting you borrow a part of the property price. Say you want to buy a $100,000 house. If you put down, meaning pay with your own money 20% of the price, which is $20,000, and the bank or private lender pays the remaining 80% or $80,000 to the seller, that's leverage. You now have an asset that costs $100,000, but you only spent $20,000 to get it. But leverage is even easier to understand with more than one property. Imagine that you already have $100,000 saved for investing. You could buy just that house with your money and not borrow from a bank, but you can leverage by putting down $20,000 on 5 such houses and borrowing $80,000 for each from a bank or private lender. Now, instead of getting just one property for your $100,000, you get 5 properties at a total value of $500,000 or $500,000. This is the power of leverage. There are 3 very basic ways you can use leverage. 1, you can purchase a $100,000 property by putting down $20,000 and borrowing the remaining $80,000 from a bank or private lender. You then turn around and sell the property for, say, $140,000, get your $20,000 back, pay back $80,000 to your lender, and make a $40,000 profit. This is a capital gains strategy explained in very simple terms. In real life, you will likely need to make some improvements to the property to justify the fast price increase or wait for it to appreciate. So in either case, you end up paying some mortgage, some materials or labor, or likely both. The second way you can use leverage in real estate is by renting out your property for a rent that is higher than your PITI monthly payment, meaning mortgage principal, interest, tax, and insurance. That way you get a monthly income from the property by putting down $20,000 and borrowing $80,000. Over several years, you will get your $20,000 back from the cash flow and will be ready to reinvest it. This is how you leverage for cash flow. You've gotten your down payment money back and your property is now making real profit. And the third way you can use leverage in real estate is by taking advantage of the first 2 ways. You place a $20,000 down payment on a $100,000 property, borrow $80,000, put tenants in, start making cash every month, wait for the property to appreciate over several years, and then sell at a profit. These are 3 basic ways you can utilize financial leverage in real estate. Of course, there are variables, nuances to each deal that can get a bit more complex, but knowing the basics gives you a foundation of principles from which you can expand your options as necessary, and in real life, things tend to fluctuate indeed. Thank you for watching. I hope this was helpful, and I'll see you again soon.